Now here are a couple examples, counter diagonals. So here's TLT. We've had a couple really good ones with TLT. TLT is a great ETF for these type trades for certain situations. Okay, it all depends on the market and the chart pattern. But here, structure again for defined risk, really taking advantage of selling time and volatility, used for directional target trades, used for income, getting paid while we wait, kind of poor man's covered call, you might hear it called that. Greater than the income calendar, so because we have the diagonal part of it, trade duration can be 1 week to months out. You can go months and months out. Always going to give you positive theta, no time decay. So here's one we did. This was the first really move up on TLT when it bottomed out in November. We did this trade. This was a really good one. So this was on the 1st of November. It was trading at 84.97. Then we did a couple adjustments and profit, and I'll go through and show you. So we do a lot of adjustments on these because we can just keep the trade going for so long. So we started this TLT trade. It was right here. So bought the 17 November, sold the 3 November. So 85.86. So look at this. So this was $1.50 wide spread. See that 85.86.5. So at that time, so spread was going for $1.40, so $140. Okay, so then we did a couple adjustments here, and we did adjusted trade. We adjusted this to, we're still long that 17 November, but instead of being long the 85, we adjusted up and rolled the short strike up to 86. We locked in some profit from that 85 long. Now we're in the 86, and then we sold against it the 10 November. See, this was the 3 November, so we rolled the short strike to the 10 November and sold the 92. So we widened spread out, right? So we went from $1.50 wide spread to a, what is that, $4, $5, $6 wide spread, okay? So now we're along the 17 November 86, short the 92. So this is where you can really widen these spreads out and follow a trend. So this then, you see on the 8th, this thing was up over $275 per spread by doing this kind of adjustment strategy. So started out here, right there, perfect, really perfect entry actually. So you can see TLT had sold off real hard. See, here's the perfect example of why this trade strategy is so good. See it's bottoming here. So you do this type of strategy and it can churn sideways and you're still getting paid while you wait, and then finally it breaks and kicks up. So with our indicators though, we can get really tight, really good entries. So you could have, if you were just trading this thinking it's going to bottom, you could have done it right here. But with our indicators, you can see that reversal arrow, and you'll get this as a bonus indicator. So we had a reversal here, so set the spread up right there, and then you can see, boom, ticked up. We did an adjustment here, widen out that spread, and then start taking profit in there. So that's kind of basically kind of give you an overview picture of what we were looking at. And so when we did the trade here, it was trading at 84.97. Third, it was trading at 88.30. We adjusted it to this spread here. We went from that 85, 86.5. Now we're going to be 86.92. So widen up the spread. And we had a super low risk because we took a big profit, when we rolled it up. So anyway, we're into the debit cost of $96. Spread blew up to 381. So here we are, $285, 296% return. So these are just some of the favorites to do. And we just did one this past week on TLT. I'll show you a little bit later on that.